What's up, guys? Stas here. Welcome back to another video. So listen up. We have a lot of companies to break down today. We have 7 in particular, all of which are reporting earnings this week. So we're going to break down the charts, my thoughts on the charts, and the EPS and revenue estimates, some more insights there. So if you all find value, smash that like button. Make sure to subscribe. And guys, don't forget to follow me on X as well, at Stas Talk Stocks, link down below. And with that being said, cheers. Let's dive right into the video and break down these stocks before the 1 o'clock football game starts. It's what time is it? About 12:30 right now. So we have a half an hour to edit this video. Well, film it first, then edit it. Then we're gonna go watch some football, guys. So let's bang through these stocks and break down what is going on with this week coming up. So we have 7 companies again set to report, and the S&P, let's be honest now, and the NASDAQ, let's pull up Triple Q and take a glance. Let's be honest, it's a bit stretched in the short term. It is. I mean, it just is. Right now, we just hit a fresh high on the 4-hour chart on Triple Q. You guys know that. So we're trading at highs, and on SPY, we're not quite at the highs yet, but we are noticing we're up massively in the past couple weeks, 11%. We are getting a bit of a bearish divergence here on the RSI. You guys can probably see that as well. If you notice, well, my freaking head's in the way, so you can't see it. There we go. If I move my head for a second, you guys notice here the RSI is coming down on the bottom, and then we still have this going up. I think we're going to see a bit of a pullback, maybe not this week or tomorrow or in a couple of days. Who knows when it comes, but I feel like we're due for a pullback overall. Not a complete reversal to the downside, because overall we're not getting any signs of that. But maybe just a little bit of a cool off, right? Maybe it comes down to 445, 448. I don't know, just throwing numbers out there. We can see that's, roughly the high from back in the beginning of September. But yeah, I mean, I'm not the only one. I can't be the only one that thinks it's a bit stretched, and we'll see what happens in the short term. But overall, in the past couple of days, past couple of weeks, markets have been on a tear. The VIX is back near the lows from where it was a couple months ago. Actually, no, it took out the lows from a couple months ago. I mean, guys, this is getting insane. This is getting insane. I mean, look, we're at 1245 on the VIX as of Friday, and that is lower than where it was back in June, back in July, back in September, when I was saying the VIX was super low. Then we saw a huge move back to the mid-20s, and now just like that, boom, we're back in the 12s. That is a bit worrisome, in my opinion, in the short term. I'm not going to say we're going to crash or we're due for a massive spike in the VIX, but whenever I see it get this low, I get a little bit, I'm more on my toes, right? I'm like, okay, I gotta be a bit careful here and just keep an eye on the VIX, right? As it is, again, very low. So let's break down these stocks. Before I ramble too much on about what's going on with these other charts, let's go over these stocks that I'm looking at for this week. So number 1 is CrowdStrike, which, my goodness, talk about overbought. I think I mentioned this in my video, actually. I made a video maybe a week ago. I forget when it was, but it was called 3 stocks that are overbought or something like that. I forget exactly what it was called, but I'm pretty sure CrowdStrike was in that video. And my goodness, guys, if these earnings are not good, maybe their guidance is not strong, this could drop like a brick. You have to realize this right now. I'm not saying for sure it's going to happen. Again, we're not fortune tellers here, but we pretty much judge things based on previous events, previous things that we've seen, and by we, I'm saying traders in general, because as you do this longer and longer and longer, you see things play out over and over and over again, the same thing play out over and over and over again. And who knows, maybe they crush earnings and it goes up 30%. I have no idea. I guess it all comes down to guidance with these types of stocks. But I'm telling you, if their earnings are not good, or maybe their earnings are good and maybe guidance is a bit soft, this could easily fill the gap down to 185, 190. I'm not trying to fear monger. All I'm doing is being real here. So we have CrowdStrike coming up on, I believe, Tuesday. Is it on Tuesday? Let's see here. Yes, I believe on Tuesday. Yup, the 28th after the bell. So this could come down to maybe 185, 190. That would be the healthy thing for the chart to do. But who knows? Again, with earnings, who the heck knows? And please do your own research, guys. I'm not, telling you what's going to happen. I don't know what's going to happen. All I'm saying is from previous, all the previous times I've seen companies, stocks see huge run-ups into earnings, they disappoint, boom, they drop like bricks. I've seen this happen time and time again, as I'm sure a lot of you out there have as well. So keep your eyes on CrowdStrike. EPS 74 cents is the estimate versus 40 cents from last year, and revenue's looking to come in at $777 million. So 777s, man, maybe they do get a huge beat on guidance and it goes up 30%. 777s, I don't know. We'll see, guys. We'll see. But look, CrowdStrike, CRWD, Intuit is another one. INTU is the ticker. This is another one that's at highs on the 4-hour chart heading into earnings. Another one that's a bit stretched, arguably, as the RSI is over 70, which is insane. So right now we have them set to report earnings on the 28th, Tuesday, same day as CrowdStrike, after the bell here for Intuit. So they're looking to do EPS of $1.98 versus $1.66. So both them and CrowdStrike, they're looking pretty good in terms of EPS year over year. Intuit, $1.98 versus $1.66 from last year, and revenue $2.88 billion is the estimate. Not too bad. And let's say we do see a bit of a pullback on Intuit. Let's see where we could be coming down to. So the highs from the end of, or actually early September, were 558. Maybe that's where we draw down to initially. Let's see here. What's the next one? 550 was the high from early mid-October. That's where we could come down to potentially, maybe play in this gap here. Then if that were to break, boom, 525, the moving averages on the 4-hour, that's where we could be going right around here. We might be filling the gap down, as you guys can see, boom, like that. We'll see, guys. I don't know, but Intuit right now, they're looking to be growing EPS quite nicely, although that number could be manipulated. We're not going to get into that in this video. But look, INTU, keep your eyes on it, but I'd be a bit cautious, again, as it is up a ton recently, overbought on the RSI. I'd watch for that gap to the downside on Intuit potentially, unless they have blowout earnings and blowout guidance. We'll see. And Snowflake is another one that is this week that is, quite a volatile stock. And this one's looking pretty good. I'd say this one, although it is arguably overbought as well in the very short term here, we're slowly breaking out. You guys can see this could have legs to it. This rally here could have legs to it because we're still about $25 off the highs, and we just recently started breaking out over the past, really, 2 weeks here, about 2.5 weeks, whereas the other stocks, CrowdStrike has been breaking out for freaking months at this point, guys. And the other one was Intuit. This one it's been breaking out as well for months. So Snowflake was in a downtrend for months right here. Boom, you guys can see. Now we're slowly starting to get out of there. So this could have legs to it, maybe to 180, maybe 195 over time. We could get to that again, which was the high from a couple of months ago. So this company is set to report on the, I think, Wednesday, right? 29th? Yeah, 29th after the bell. They're looking to do EPS of 16 cents versus 11 cents from last year on revenue of $713 million. So they're actually pulling in a profit this year higher than last year's, although in the past 2 quarters they have reported negative EPS. In the last quarter, negative 69 cents. Before that, negative 70 cents. So maybe it's the third quarter here that is usually profitable for Snowflake. I have to look deeper into that or look at the previous couple of years. But overall, Snowflake is looking pretty good on the charts. We're breaking out here. We're taking the highs out from October, which is great. Now we're actually testing the highs from, when was this? Let's see here, guys. The middle of September being 170, 172. If that breaks this week, maybe 180, maybe we break that. Time will tell here on Snowflake. The next one, guys, is good old Salesforce CRM, which right now is slowly breaking out of this channel I drew out a couple of videos ago. You guys can see we're pretty much at the top right now of that channel. And we're still under the highs from, it looks like early August or early September, rather late August. We're still under that point, which is 230, which if that, I guess, starts to break, we could get a huge breakout from there, guys, but we're not getting that yet. So this one's interesting. I mean, according to the RSI, it is a bit overbought, and it's ran up a ton over the last just couple of weeks alone. It's up 15%. So maybe this It's in an interesting window right here. Do we break above 230? Do we run back down to 210? It all comes down to these numbers, guys. So we see them reporting on the 30th, which I think is on Thursday. Yeah, that's Thursday, this upcoming week after the bell. Yeah, they're after the bell. So they're looking to do 206 in EPS versus $1.40 last year. So their EPS will be above last year's for the same quarter, and revenue is $8.72 billion. That's what's projected. So we'll see what they do with their numbers there, guys. And CRM, in the grand scheme of things, on the 3-year chart, guys, could be setting up for an overall breakout. That's kind of what I'm getting from this, but we just have to wait and see for the confirmation. I mean, it looks like we've been moving downwards for a couple of months here, boom, 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 zigzagging, and we could be setting up for that break. But I just think the market wants to digest the earnings first, or first get the earnings, then digest them, then they'll decide what move they're going to make, right? The stock's going to ultimately decide, the market, that is, and we'll see where, it goes from there. On the 3-year chart, again, we could be setting up for a breakout, maybe back towards the mid 200s, maybe higher than that. We'll see. So that is CRM, guys. The next one here is Foot Locker. But actually, before we talk about Foot Locker, guys, make sure to get your 10, actually 15 free stocks from Moomoo, each up to $2,000. Just use that link down below, guys, or go to stocksurfest.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat. And if you want to up the ante a little bit, guys, fund your account with at least $1,000. On top of those 5 stocks you just got, you get 10 more stocks, totaling 15 stocks, each up to $2,000, guys. So use that link down below. And of course, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, cheers. Let's break down the last couple of stocks here. We have 3 more, and then we'll wrap up the video. So Foot Locker, which has been in the gutter, let's be honest. It's been thrown in the trash, chewed up, spit out, dumped on. I mean, geez, guys, this stock has been destroyed, and the last 2 earnings have not been good, which makes me very nervous for this upcoming earnings report. You guys can see a couple months ago, back in the May time period, when they reported for, that was the first quarter, right? The stock went from $41 to $26 per share. I mean, this thing dropped 37% like that. And then last quarter that they reported, it went from $24 to $14, 40% drop in a couple of days, which is unreal. And it's kind of the same thing that's happening right now on the charts. Let me show you what's going on. So look, the first time we saw that huge gap down on Foot Locker, it went from 41 to 25. We failed to retake that, or fill the gap back up to 40, right, and retake that level. We failed to do that, and that's kind of what's happening again right now. Notice this. We have earnings coming up this week. Again, they're on, I didn't tell you yet, they're on Wednesday the 29th in the morning. So it's the same thing that's going on right now. We dumped massively to 1450, 1480, whatever, consolidated a bit, started rallying, but we failed to break out, at least as of now. We failed to break out of this $25 level, and we failed to retake those highs from before the last earnings report, which were $25. So this is like the same setup here. We're failing to break out of the recent highs from before the last earnings. We're failing at those gaps, and this could be setting up for another major dump. That's if Foot Locker reports terrible earnings, as it actually has ran up a lot in the past couple of weeks since the last report. This thing was at $15. Now we're at $23. This entire gain here, that 50% gain, could be erased like that. You guys have to realize on Foot Locker, as their EPS last year was $1.27. Now they're looking to do 22 cents, guys, on revenue of what is it? $1.96 billion. Yeah, be a bit cautious about this one for sure. Hopefully they do well. I hope so, but I'm not too confident in Foot Locker by any means right now. And Kroger is another one which has been doing very poorly. Their stock, it's at $44. It was at $50 a couple months ago. And I'm pretty sure a couple years ago, it was at $62. So it's down about 40 from 44, or it is 44 to 62. So about $18 or 30% it's down in the past couple of years here. And they have earnings coming up on Let's see here, guys. The 30th, which is on what, Friday morning or Thursday morning? That's Thursday morning. So they're looking to do EPS of 90 cents versus 88 cents from last year on revenue of $33.89 billion. So they're raking in a lot on the top line. And their EPS is expected to grow year over year, which is nice, but their stock is still in a downtrend. Not loving it, guys. So let me draw this channel out so you all can see it, and we'll wait and see if it breaks that at some point, maybe. Looks like it is testing the top of the channel right now, which is at about 44, 45 bucks per share. So keep your eyes out on Kroger. I'll set my alert at 45 bucks. Let me do that now. Mark is at or above $45. Boom. And let me pull up now the last stock, which is Ulta, ticker symbol ULTA, which is in an overall downtrend. It's been in one for a lot of this year, guys. I mean, this thing was at 560 before earlier in April. Now it just hit 368 a couple weeks ago. It's at 415 now in real time. And it's slowly breaking out. It is, but not fully, but it is peaking above the moving averages. We arguably have a golden cross in the making here. So with a good earnings report, maybe, just maybe, this could spark the breakout on Ulta. So they're on, let's see, Thursday after the bell, the 30th. They're projected to do $4.96 of EPS versus $5.34 from last year on revenue of $2.47 billion. Not too bad there, guys, for Ulta. So yeah, I mean, let me set some alerts. I'll put one at, let's see, 420 maybe. I'll put one at 420. Put another one at 440. Let's see where the high was. Actually, it was more like 460, but I'll put one at 440 for now, and we'll see if we do get some upwards action on Ulta stocks. So what do you guys think? Let me know your thoughts in the comments, and please, please, please do your own research, your own due diligence. I'm not telling you to buy these stocks. We're just breaking them down here, the charts, the numbers, and when they're reporting to put them on your radar. So make sure you guys hit that like button, subscribe, do your own research, and don't forget to follow me on X at Stocks Talk Stocks. I'll catch you guys later.